Welcome back to the channel, Apes and Apettes. Today was a very bloody day in the markets, but AMC had a very good day. AMC only down 2.6% is massive. Why do I say that? Because look at my portfolio. PayPal down 5%, Affirm 6.5%, Lucid 8%, SoFi 8%. Square 8%, DraftKings 9%, almost 10%, UWMC 6%, almost 6%, AMD 5%, Snapchat 4.5%. So considering all of that carnage, AMC was actually one of the better performing stocks in my portfolio, and a 2.5% negative day on a day like today is massive. So I hope you guys are very excited for that. Not quite the day a lot of people were expecting, considering today is March 3rd and we were supposed to see the MOAS. Apparently that was the running rumor. So we're going to get into this whole situation for the day and what you guys need to know heading into tomorrow and then starting off next week. So we have a lot to get into. Let's get into it. Hit the like button and subscribe to the channel if you guys have not already and you want to stay up to date with all of this information, which will make you guys money. Come join the trading community as well, link down below in the pinned comment, and get yourself some free stocks with Webull, Moomoo, and Public in the description. So AMC, like I said, down about 2.6%. We closed above 1775, which shows a lot of strength in my personal opinion. We did see a lot of resistance today around this 1850 level. Once right here, twice, 3 times, and then 4 times. We actually opened at about 1870 and then went straight down along with the whole entire portfolio. So AMC was not spared the blood on Wall Street. But nevertheless, they didn't feel it as much as a lot of other things. And we're sitting right in between this range of 1850 resistance, 1775 support. So we got a pretty tight range going on. And I do want to see what happens tomorrow. We do have non-farm payroll data that comes out tomorrow morning, and that's going to be another big catalyst. But the main catalyst of this week was Wednesday and today, and that was Fed Jerome Powell. And basically what he said was, hey, we still plan to raise rates. We plan to run off the balance sheet at a calculated, precise fashion. But we're not going to stop doing that. At the same time, we're going to raise rates for sure March 16th at the next FOMC meeting. But we don't know after that. Basically, they're going to wait and see how this Russia-Ukraine situation is going to impact things. Because a lot of things you wouldn't even realize come from Russia and Ukraine. The wheat, corn, a lot of precious metals for things like EVs and batteries, lithium. A lot of that stuff comes from Russia, Ukraine. So you're going to see that price inflation in a lot of different commodities, which you are seeing right now, as well as in oil. So that's going to make the CPI go up, but it's also going to reduce consumer spending and consumer demand at the same time. So the Fed wants to be very careful here, and they've kind of given us this dovish tone to what they are saying. They haven't completely reversed courses, but they haven't at the same time doubled down on their hawkish stance. So all in all, it was a pretty good speech that we got from Fed Jerome Powell over the past 2 days. Nothing really for the markets to sell off on, besides your more high growth stocks are taking a little bit of the beating. And if we do go to Fed Rate Monitor tool, you guys can see that expectations have actually went up just a little bit, sitting at about 98.8% probability of seeing that 0.25% rate hike. That 0% rate hike probability has went down just a little bit. So pretty interesting what we're seeing going on right now. Nothing too crazy as far as that is concerned. The longer end of the curve is getting a little bit more hawkish, though. You can see by July 27th that 75% of market participants expect rates in between 1% and 1.25%. That is what Fed Bullard has been saying, that he wants rates at 1% by July. So the shorter end curve, you're talking about until March, right around the corner, is on the dovish side, but the longer end curve, like July, which is not even long term, but the longer end curve is pricing in a lot more rate hikes. So that's part and part why you are seeing a lot of these higher growth stocks that are actually selling off today. Like I said, a lot of commodities and a lot of money is actually focusing on playing those said commodities. But like I said, we have non-farm payroll data that does come out tomorrow morning. And that is obviously going to move things around quite a bit. And that's really the only other catalyst we have. We know there was some talks of peace talks, and then it kind of got reverberated that it wasn't going to happen by the end of the day today. That's kind of why you started to see that sell-off in the markets. Peace talks kind of, got thrown out the window over in Ukraine and Russia. So that's a big reason why the markets did start to take a turn to the downside and actually dropped quite substantially from 439 to 433 at the low end. So that's what happened there. It's just been a very red day, and I think AMC is looking beautiful being down 2.5%. I know that's crazy to see, but you guys even seen the proof on my portfolio. AMC definitely one of the better performing stocks in that portfolio. Only had one stock that was green today, and I believe other than that, AMC was the second best performing stock in my portfolio today. So as far as AMC and the option activity, we are looking at 63% positive order value for the day. 11 orders totaling $2.71 million. That is very, very bullish considering we were even down 2.5%. And I do think you are going to see that earnings continuation. You're going to see that earnings rally like we historically and typically do for AMC stock. But it's not going to be in the next couple of days. It could be a couple weeks out. As you know, the typical range is in between 2 to 4 weeks after earnings. You start to actually see the earnings rally. So it's a little bit weird how things turn out. Seen about a double up back here in March, about a 10x move back here in May 2021, another double up right here in August of 2021. The last earnings we actually did fall, but I do expect, like I said, to see a bullish reaction after this earnings coming throughout the next couple of weeks. And if I see an opportunity with options, I will for sure be trading that, and I will let you guys know if you guys want to know that information, what I am trading in real time. Check that link out pinned down below in the top comment. Nonetheless, looking very bullish from institutional option flows that are coming through today. The short interest of free flow is sitting at 20.88%. Current shares that are sold short of about 107 million. Cost to borrow max of 2.32. The cost to borrow number is doing some very, very strange things as of late. So, we're not seeing a move down. We're not seeing a move up. It's kind of just going up and down 1% every single day. I really want to see the cost to borrow max going up, and I want to see the utilization staying the same, if not just staying the same. If the cost to borrow goes to, say, 30-40% and the utilization does come down a little bit, that's not a bad sign. That would still be very bullish. I want to see how high the cost to borrow max can get with the utilization staying at 100%. That'll show me how bullish hedge funds are and what percentage they are willing to collect to lend out their stock to be sold short. Right now, they're not going to take 2.32% to lend out their shares when AMC can easily move 5 to 15% on a daily basis. So that's good. Days to cover 2.46, so also looking very good in that regard. Max Pain, if you guys have not seen this, it is sitting at about $18 by the end of this week. And for the SPY, the Max Pain is actually at 437, so pretty interesting there. In the Stocko Tracker data, we'll go ahead and pull that up because that does move around a lot. And if we do see a rally tomorrow, we could see a lot of activity from the market makers having to hedge out these positions. You're looking at 17,000 calls that are in the money, 138,000 calls that are out of the money. For the put side, 7,200 puts that are in the money and out of the money puts at 75,000. So the ratio here, only 17,000 calls that are in the money compared to 138,000 calls that are out of the money. If you do see a move tomorrow and we can break above 1850 and then break above 20, you could see that continuation effect. But overall, March 3rd was a dud, like I called out in the video over a week ago. And there you guys have it. There is the cat sound effects again. He is going crazy over there. I'm gonna have to put him in a video one of these times. He's a little crazy, a little spazzy. He might hit me in the face and get me, but we're kind of cool. We're kind of chill, but that cat's crazy. Anyways, I hope you guys heeded the warning about March 3rd. There was nothing that happened today. You guys can't listen to the Trust Me Bro sayings. You have to see factual data or something to back up what somebody says, because you are going to lose money if you listen to the trust me bro arguments. If somebody makes a video and doesn't show you a chart, a data point, or something, a proposed rule change, anything to support what they are saying, you got to take it with a big grain of salt, because March 3rd was a huge dud and nothing happened today. There was no clearing of books, there was no proposed rule change, there was nothing that got implemented today. So that's the gist of this video. As far as the actual technicals, everything looks pretty good, same as what it was earlier. The RSI is pretty much neutral. MACD is still a little bit bullish. We did bounce off the 20-day simple moving average in between the Bollinger Bands, and that was at about 1765, and that's right by our 1775 level we have had marked for a while now. Lots of support in between this range, 1775 and this 20-day simple moving average. Both these levels are looking really good as far as support for a potential move to the downside. And resistance, really 1850, in between that 1850 and 1950 level. If we can break above that, we're clear to go to 20, and I think it is going to happen in due time here in the next couple of weeks. But that is not telling you to YOLO everything into that. You take that risk by yourself. Hit that like button, subscribe to the channel if you guys have not already, to stay up to date with honest, transparent information that will make you guys money. That is your way to do that. If you guys want to stay up to date as soon as videos are posted, sometimes the timing of videos is very, very important. Hit that notification bell. If you guys want to come trade with us, link down below in the pinned comment to do so for that, for the trading community. As well as all that, get yourself some free stock with Webull, Moomoo, and Public. I believe Webull and Moomoo are giving out like 5 free stocks right now, so you guys definitely want to be a part of that if you have not already. Worst case scenario, you get yourself some free money. So thank you guys for watching. I'll see you on later tonight on the live stream. Until then, you guys enjoy the rest of your day.